tell us a little bit more about that relationship between the lease management and business strategy.
Yeah, so we'll start with the theme we've been harping on is that, management may not have paid as much attention to leases other than the fixed charge that they represent coming through. But now when you're providing financial statements, whether it's to stakeholders, to lenders, now you've got the grossed up assets and liabilities that you need to explain to others. And now people pay a lot more attention when you're putting a significant amount of assets on there. Even though you've been using these assets all of these years, now they're front and center where everyone can see them. That has an impact in terms of how you communicate that message to your stakeholders. What are we doing here? You have investors or stakeholders that may raise their hand and say, hey, I didn't realize that we were leasing this much, real estate, or we have this much tied up in equipment leases, and now you're disclosing the rates. Are these, are we getting great rates? Or are these good deals? You get a lot more questions in terms of managing the expectations of readers. But also another thing that you need to think about as you're going through this is the relationship between you and your financial institution. So the lease standard could cause some issues for you in terms of debt covenants or in the amount of financing or affect some of your key financial metrics. So it really does change the way you may look at your business and evaluate your business. And in some cases, I've worked with a few clients that had to change their bonus plans because of the new leasing standard. So depending on the way they record it, you record these assets and these current and non-current liabilities on your balance sheet, and the way you measure the lease expense through could have an impact on how you incentivize people within your organization. So again, it goes far beyond just the straight up compliance with the respective leasing standard you're adopting. But then beyond that, I talked a bit about the capabilities of having a lease software, having this sort of centralized process now beyond the way we used to just think about leases. What came out of COVID-19, say in particular, as an example, is that we saw a lot of people downsizing. We saw a lot of empty properties in 2020, and there was a lot of sky is falling sort of concern that, hey, is this going to bottom out? We've a lot of folks have made a lot of investments in properties or entered into 10, 15, 20-year leases on real estate in particular. And even equipment vendors were out there saying, well, hey, if this economic slowdown continues much longer, I don't have cash flow coming in from leasing out equipment. What are we going to do? And now we have, and probably everyone's, I think this phrase has been banned in some circles now in some websites, but this new normal that everybody's working in, where so many more people are working remotely or working hybrid sort of arrangements now, means that there may not be the same type of demand as there were in the past for leased real estate property, for example. Although we expect 2022 to continue the rebound that we saw a bit in 2021. It's changed the dynamic. It's changed the dynamic for landlords or lessors who may have to offer different types of amenities or different types of incentives in order to convince lessees to come in and use property. If you're a lessee, if you're someone who's renting real estate or considering renting real estate, do you look at 10, 15-year leases now? Because in the past you may say, hey, this is economical, our office, these are our headquarters, or this is a key manufacturing or key distribution facility for us. We're going to be here for a long time. Well, although we hope it's once in a lifetime, this once in a lifetime, COVID event exposed that, hey, maybe we don't want to be locked into these long-term deals. Maybe we want to be more flexible. Maybe we want shorter lease terms. Applying the rules of the new standard, putting these things on the balance sheet, and now having to worry about having impairment or other issues that, are easy to be seen now by stakeholders when they're looking at your financial reporting, is that having the software and having the ability to understand what your terms are, how those terms impact you, gives you a chance to be more flexible. Do you want to do extensions? Do you want to do more variable rates in your leases rather than fixed terms? What do you want to do now with leasing? Leasing can be more of a strategic tool than it has been in the past.